Joining me down the line to discuss this week's market-moving events is Mike van Dulken, Head of Research at Accendo Markets in London. So Mike, Turkey's inflation rose more than expected in September when it came in at 7.9% year on year. And some analysts believe that inflation could rise further in the coming months. Do you share the same view? And do you believe we could see the central bank tightening monetary policy and raising rates in the near term?
Yeah, I mean, Turkey's very different to the major central banks that we were traditionally looking at, where we're worried about rate hikes, for example, the Bank of England and the Fed. But I think if we look at the surge in oil prices that we've seen just over the last week, that's definitely going to trickle through in the coming months. In some cases, it's going to be a welcome thing. For example, where inflation is missing in action in the UK, Europe, and in the US. But of course, when it's somewhere like Turkey, and inflation is already quite elevated, it could certainly lead to the central bank needing to look at policy and decide whether it warrants a slight tightening.
From data out this week, we saw the US trade deficit rose sharply in August, and the pace of growth in the services sector cooled. How do you see the US economy performing in the rest of the year?
Yeah, it's a difficult one over the summer months because things can get erratic. We did have, the sharp sell-off in emerging markets in China, which may have sapped a bit of confidence. But that data is for August. We've obviously already had August and September since. But I think the services sector, while it cooled, I think it was still kind of a level that is still, certainly the Fed is still kind of happy with. The worry really is on the job side now. That was part of the mandate the Fed was quite happy with. It was the inflation and the global risks that were the real worry. But it may have to start looking at employment again. But in terms of the trade deficit, it wasn't a huge, I don't think it was a huge change. And I think, seasonality may have played its part slightly.
We also saw the BOJ stand pat on its 0% interest rate and its annual stimulus program of 80 trillion yen this week. But do you think we could see the Bank of Japan tweaking QE anytime soon?
Yes, I think the only reason they didn't move immediately is there may be a chance that the government actually does something in the interim. So I think there's quite a lot of people out there expecting that the BOJ may indeed do something by the end of the month, because the signals coming through from macro data are pretty recessionary. Almost all the data we've had out recently has been pretty pointing that way. So I think it is going to be obliged to increase stimulus, as indeed the ECB might, which is obviously in stark contrast to where the Fed and the Bank of England sit when they look to be itching to raise rates, even if that might not be possible quite yet.
And finishing up, were there any other standout market movers this week? And what should we look to next week?
Over here in London, the standout mover has been Glencore, which is we've been talking about for a couple of weeks now. We're currently sitting there with it trading at 134.50, which means it has technically doubled from its lows. So that's quite an impressive move in the space of 10 or 11 sessions. And then for next week, I think we might want to keep an eye data-wise. I think we've got China reporting some data. We've got foreign direct investments on Sunday. Got the UK inflation on Tuesday, along with Chinese imports and exports trade data on Tuesday morning, and that'll give us a updated view on the state of the Chinese economy for September, which could either boost sentiment or indeed sap it in terms of how we're viewing emerging markets, which obviously the most important central bank in the world right now, the Fed, is watching very, very carefully.
Mike, thank you very much for sharing your views with us today. Well, that is all from me for now. Goodbye.